Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 4th, 2025, we're diving deep into Tesla, ticker symbol Tesla, with a focus on both recent major news and its implications on the charts. Let's start by looking at the broader picture on the one-day chart, encompassing all available data to get a sense of Tesla's historical context. The biggest news dominating headlines today is the approval of an interim stock award for CEO Elon Musk, totaling approximately $29 billion. This comes merely 6 months after a judge revoked his prior pay package, and analysts like Wedbush's Dan Ives suggest this new grant removes a key overhang and ensures leadership stability through 2030. This news is being perceived very positively by the market, with reports of Tesla stock jumping over 2% in pre-market trading this morning. However, it's crucial to remember that Tesla's market performance has been challenging this year, with shares plunging 25%, attributed to factors like intensifying competition and recent financial results showing a significant drop in profitability. Another major point of discussion is Tesla's aggressive push into the Robotaxi market with its full self-driving system and the upcoming dedicated cybercab vehicle, projected for volume production in 2026. Now, let's translate these events to our one-day chart. Looking back, we can observe a significant downtrend earlier this year, particularly in February and March, correlating with broader market concerns and perhaps the initial legal troubles surrounding Musk's compensation. Notice the sharp drop in early March, where price fell from above $300 to around $220. This could directly relate to the period when the previous pay package was revoked. Following this, there was a strong bounce-back period in late March and early April, indicating that buyers stepped in aggressively at those lower levels. From mid-April through mid-May, Tesla mounted an impressive rally, climbing from the low $200s to nearly $360, reflecting renewed investor optimism, possibly driven by initial optimism around FSD developments or broader market recovery. This $360 level acted as a strong resistance point, indicating significant selling pressure whenever the stock approached it. Since then, we've seen a period of consolidation and a gradual decline, with prices fluctuating primarily between $300 and $340 during June and July. The most recent candles, particularly for July 31st and August 1st, show a clear dip, closing at $308.27 and $302.63 respectively. This recent weakness could be attributed to the acknowledged rough quarters ahead and the decline in Q2 free cash flow highlighted in the news. Let's zoom in on the shorter time frame, the 1-hour chart, to analyze the immediate price action leading up to today's news. Over the past few days, specifically from July 14th onwards, we can see a general downward trend, punctuated by minor bounces. Notice the significant drop on July 24th, where the stock plummeted, and then another sharp decline on July 31st, falling from roughly $325 down to the low $300s. The 15-minute chart provides even more granular detail on this recent bearish momentum. Observe the sustained selling pressure on July 31st, as indicated by consecutive red candles, particularly during the second half of the trading day. The price struggled to hold above the $310 level, eventually breaking down towards the $306 to $302 range by the end of the trading week on August 1st. This current price level around $302.63 on August 1st is significant because today's news regarding Musk's pay package indicates a pre-market jump to around $309. This suggests a potential gap-up open for the August 4th trading session on the one-day chart, which would immediately challenge the short-term resistance levels established over the past few days. For traders, this creates an interesting scenario. Will the positive news overcome the recent bearish chart pattern, or will the selling pressure that brought the stock down last week reassert itself? The immediate resistance on the one-day chart appears to be around the $310 to $315 levels, which were previous support points that recently broke down. If Tesla can consolidate above this $309 to $310 level, it could signal a short-term bullish reversal, potentially aiming for the mid-$320s. The key support level to watch on the daily chart is the $290 to $300 range. A decisive break below $290 could signal further downside. Reasons to be bullish include the removal of the Musk compensation overhang, ensuring leadership stability, which Wedbush highlights as a major positive. The aggressive Robotaxi rollout plans, if successful, could provide massive long-term revenue streams, fundamentally changing Tesla's valuation model. Additionally, the long-term historical performance of Tesla, as seen in the broader one-day chart, shows its ability to deliver significant compounded returns, indicating strong innovation and market leadership. However, reasons to be bearish include the company's acknowledged rough quarters due to high interest rates and the upcoming federal EV tax credit removal, which could impact sales. The sky-high valuation at 191 times Wall Street earnings estimates for 2025 presents a significant risk if growth projections aren't met. Furthermore, intensifying competition from traditional automakers and Chinese manufacturers poses a continuous threat to market share and profitability. In the short term, the market's reaction to the Musk pay package news, potentially a gap up to $309 or higher, suggests immediate bullish sentiment. However, continued selling pressure from the past week might lead to profit-taking once the initial excitement wears off. For long-term investors, the focus remains on the success of FSD and Robotaxi initiatives, which, despite risks, offer substantial upside potential if executed well. A sustained break and hold above the $315 level on the daily chart would reinforce short-term bullishness, potentially targeting the $325 to $330 range. Conversely, a rejection from these levels or a fallback below $300 would suggest bearish continuation, with the next major support at the March low of $220, though that's a more extreme scenario. The overall market sentiment and broader economic conditions, particularly interest rates, will also heavily influence TSLA's performance in the coming months. To recap, important price levels for Tesla include immediate resistance around $309 to $315, representing the recent breakdown area and the news-driven rally. A strong short-term support exists around $300, with a more critical long-term support at the $220 level from the March lows. Unbiased predictions suggest that a sustained move above $315 is likely with 60% probability if the market continues to cheer the leadership stability and Robotaxi progress. This would be reinforced by strong volume and positive commentary from analysts, pushing towards the next resistance at $325 to $330. Conversely, if the excitement fades and underlying Q2 concerns or broader economic headwinds take precedence, a retest of $300 or even a break below is possible with a 40% likelihood. Conditions reinforcing this would be weaker than expected Q3 delivery numbers or further delays in FSD deployment. Keep an eye on regulatory updates regarding Robotaxi and Musk's public statements, as these frequently move the stock. Also, monitor the federal EV tax credit situation post-September 30th, as its removal could impact demand. Remember, trading Tesla involves significant volatility, and a diversified approach is always recommended.